Northrop Grumman Corp closed at 618.82 USD on Friday, January 9, 2026, marking an intraday surge of plus 28.03, 4.74%. While the broader market has been wrestling with extreme volatility in the first full week of 2026, Northrop Grumman has managed to detach itself from the gravity of the tech sector's retreat. Most investors looking at the ticker right now see a massive green candle and assume it is just another geopolitical reflex, but the reality is much more complex. We are seeing a fundamental shift in how the defense industrial base is being treated by the federal government, and the gap between what the market expects from these big prime contractors and the new regulatory reality is wider than it has ever been. The expectation from the retail crowd is that a massive budget increase always equals a higher stock price, while the headline of a proposed $1.5 trillion defense budget for 2027, a staggering jump from the already record-breaking $901 billion in 2026, sent Northrop Grumman's stock soaring. The reality is that the government is starting to attach strings that the market hasn't fully digested. We are seeing an administration that wants the dream military, but is explicitly telling defense CEOs that they cannot use this windfall for shareholder returns. When the news first broke on Wednesday about an executive order potentially blocking dividends and buybacks for companies that don't meet production targets, we saw a flash crash in the sector. The fact that NOC has bounced back so aggressively today suggests that institutional players are betting that Northrop's specific portfolio, the B-21 Raider and the Sentinel ICBM, is too critical for the government to actually penalize. If you're using an individual brokerage like Fidelity or Interactive Brokers, you probably noticed the volume spike on Friday. This wasn't just retail momentum, we saw significant institutional repositioning. As Nvidia stock and Apple stock face what some are calling AI fatigue, there is a massive rotation into heavy industry and pure play defense. People are moving away from the ephemeral promise of software and into the hard reality of hardware. For those who manage their own money through self-investing or online investing, this is a moment where the safe haven narrative of defense is being tested by a new era of production-first mandates. The tension here is fascinating. On one hand, you have the most bullish environment for defense spending since the Cold War. On the other, you have a political environment that is increasingly hostile to the financial engineering that has powered these stocks for a decade. For years, companies like Northrop Grumman and Lockheed Martin have been the darlings of Fidelity mutual funds and Fidelity Wealth Management because of their consistent buybacks and dividend growth. If those levers are pulled away, the stock has to trade on its actual industrial output and margin expansion. Comment below how many shares of Northrop Grumman you currently hold, and tell me if you think the government should actually be allowed to block a private company's dividends. Looking at the intraday movement, the stock opened at 590.68 and stayed relatively quiet until late morning when news of the MUX TAC Air contract win started to circulate. This award, which pairs Northrop's Prism autonomy software with Kratos's Valkyrie uncrewed aerial system, is exactly the kind of reality that exceeds market expectations. Most people still think of Northrop Grumman as the bomber company, but this win proves they are becoming a dominant force in the collaborative combat aircraft space, the wingman drones that will accompany crewed fighters. This is high-margin software work disguised as a hardware contract. When we look at the Fidelity trading platform or the Robinhood app, we see that Robinhood's stock trading for NOC has increased by over 40% in volume compared to the 30-day average. This indicates that even smaller retail investors are trying to get ahead of the 2026 delivery schedule for the B-21 Raider. The reality is that the first operational B-21s are expected to be delivered this year. This isn't just a prototype phase anymore, it's a scaling phase. The government has already allocated $4.5 billion specifically for scaling up production at the Palmdale plant. For an investor using SoFi Invest or looking for investment help, the key takeaway is that Northrop's backlog is no longer just a theoretical number on a spreadsheet. It is turning into delivered units and recognized revenue. However, the contrarian view is that the market might be overvaluing the revenue growth and undervaluing the margin pressure. Northrop recently took a $477 million charge related to production changes. In a world where the government is capping executive pay and demanding faster production, margins could get squeezed even as top-line revenue hits record highs. This is why some analysts on investing sites are starting to downgrade the sector to a hold. They see the $1.5 trillion budget as a buy the rumor, sell the news event. But if you look at the Interactive Brokers platform data on institutional accumulation, the big money isn't selling yet. They are rotating out of Tesla stock and into the silent sentinel of the defense world. Northrop Grumman's business model is essentially built on three pillars: aeronautics, space systems, and mission systems. Aeronautics is the crown jewel, home to the B-21 Raider. This is a program that is virtually uncancelable because it represents 1/3 of the U.S. nuclear triad. When you invest through online investment tools or a Fidelity brokerage account, you're essentially buying a stake in U.S. national security strategy. The space systems segment is also growing faster than the market realizes, with the company securing billions in contracts for tracking layer satellites to counter hypersonic threats. These aren't just defensive plays. They are essential infrastructure for the 21st century battlefield. For those using a SoFi robo-advisor or Schwab Intelligent Portfolios, the sector weighting of defense is likely at a multi-year high. The reason is simple: predictability. While the tech sector deals with antitrust suits and slowing iPhone sales, Northrop Grumman has a backlog that stretches into the 2030s. The common ground most investors share is that defense is safe, but the deeper reality is that Northrop is now a tech company that happens to make planes. Their Prism autonomy software is more similar to what you'd find at a Silicon Valley startup than at a traditional 1950s aerospace firm. As we look towards the rest of 2026, the catalysts for NOC are clear. First, the formal rollout of the first operational B-21 Raider will be a massive sentiment booster. Second, any further escalation in great power competition will keep the floor under the stock price. Third, the potential for a peace through strength policy under the current administration suggests that even if dividends are paused, the sheer volume of contracts could lead to a massive catch-up in valuation once the production targets are met. For the average person looking for self-investing opportunities on Fidelity IRAs or the Fidelity mobile app, the risk is that we are at a local top. The stock is trading near its 52-week high, and any delay in the Sentinel ICBM program could lead to a sharp correction. The Sentinel program has already faced cost overruns and timeline shifts, which is the expectation that the market has already priced in. If the reality is that the program stays on track throughout 2026, we could see the stock break through the $650 resistance level and head towards $700. Investors on Interactive Brokers Trading are also watching the buy band very closely. If Northrop can prove to the White House that its production capacity is increasing, which they are doing by tripling capacity for small tactical solid rocket motors, they might get an exemption. If that happens, the floodgates for capital returns will open, and the stock will likely re-rate to a much higher PE multiple. Right now, it's trading at a discount compared to its historical average because of that regulatory uncertainty. In summary, the gap between expectation and reality for Northrop Grumman is currently defined by the tension between record-high budgets and new government restrictions. The market expects a simple windfall, but the reality is a high-stakes negotiation between the Pentagon and the big primes. Northrop is winning that negotiation by making itself indispensable through programs like the B-21 and the MUX TAC Air. Whether you are using Robinhood Crypto to fund your Robinhood investments, or you have a managed account with Fidelity Wealth Management, the move in NOC today is a signal that the defense rotation is the dominant theme of 2026. As we close out this analysis, remember that the dream military isn't built overnight, and the stocks that power it won't move in a straight line. The 4.74% jump today is a reflection of a market that is finally realizing that Northrop Grumman isn't just a defense contractor, it's the primary engine of a new strategic era. The contrast between the volatility in Tesla stock and the steady climb of Northrop Grumman tells you everything you need to know about where institutional institutional capital is hiding. Expectations were that 2026 would be a year of wait and see for defense. The reality is that the year has started with a $1.5 trillion bang. This has forced everyone from Interactive Brokers day traders to Fidelity long-term holders to reevaluate their positions. The authority in this sector belongs to the companies that can actually build the hardware at scale, and Northrop Grumman is proving it can do exactly that. Disclaimer: this analysis is for informational purposes only and does not constitute financial, investment, or legal advice. All investments involve risk, and past performance is no guarantee of future results. Please consult with a licensed financial professional before making any investment decisions. If you found this breakdown helpful, don't forget to like this video, leave a comment with your thoughts, and subscribe for more deep dives into the market.